Good morning, friends. Once again, welcome to Daily Dossier. I am back with the daily show on which we discuss all that's going to affect stock market today. So, some updates: we have closed our position in Z Entertainment with 27% gains within 7 days. Plus, we still have Maruti and Larsen and Tubro. These all stocks are performing pretty much well. Now, we are at a juncture which is very, very important from the entire market's perspective. So, anyone who is invested or who is a trader should take a very fine note at this point of time, because we are at a place in markets which could either make room for further growth. And yes, you will hear me right when I would say markets could be preparing for new all-time highs. Yes, however, that would depend on how things proceed or how things develop from here onwards. So let me quickly go ahead and take a look on the markets. First of all, the fund flow part, it's kind of okay, nothing surprising and nothing disappointing too. Foreign institutions purchased about 460 crores, domestic institutions sold about 100 crores. Foreign institutions again sold index futures worth 250 crores, index options were bought about 225 crores, stock futures were sold about 669 crores, and stock options were sold about 88 crores. Now, the point that I'm trying to make here is they're buying cash and selling futures. So as we all had seen in yesterday's session, markets did close positive, however with a red candle, which actually means it closed negative from the opening. So with the rally, when markets made a new high of the entire downtrend, some profit booking has happened. Nothing major, nothing surprising. It's general profit booking. Volumes were subdued, so there is nothing major to worry about from the market's perspective. The entire range is same, 11,000 to 11,500. Yes, two things very important. Number one, some option activity has been seen around 11,400 and 11,700, followed by 800 call options. On put options front, 11,400 is where we are seeing some action. So markets could be preparing for a different range altogether, and that range is getting shifted from 11,000 to 11,500 to 11,300 to 11,700. So maybe markets are preparing for some new upside territory as well. Now, if you take a close look at Nifty, its 20 days moving average about 11,212. 50 days moving average is 10,780, 100 10,000, and 200 is 10,840. Market at this point of time is quite deviated from 20 days moving average, so I would suggest wait for a dip and buy with stop, by keeping 11,300 as an important stop loss. That is going to be very, very crucial. Ideally, if markets have to go up, 11,300 should not be broken. Global cues are mainly flat. RSI indicator is showing strength, but MACD is still negative for Nifty. For Bank Nifty, 20 days moving average is 21,950. 50 days moving average is about 21,780. 100 is about 20,650, and 20 days moving average, as I see on chart, as you can see the red line, the 20 days moving average is falling and coming closer to 50 days moving average. It's very, very important for Bank Nifty not to go below 50 days moving average, otherwise it will make a death cross, and that could trigger a downfall. Plus, Bank Nifty's highs is exactly the high of 13th of August, when Bank Nifty made a high around 22,400. So Bank Nifty, again, things look like they are at very important decision making juncture. Now on Bank Nifty terms, today's candle is negative. It's very similar to a gravestone doji pattern. The high of yesterday's session is going to be very, very important. Now this is how you should actually be planning your trades. Volatility is negative, so most probably the positive trend is most likely to continue. Nifty is buy on dips with stop loss 11,300. Now, the reason I'm telling you 11,300 is, in case you buy rally, let us say today we get an opening above 11,500 or 400, so you'd see that your stop loss is almost 200 points and your targets would hardly be 500 to 600. So risk reward ratio is not justified. So make sure whenever you are buying index, you either maintain your risk reward ratio through the usage of option writing or wait for a dip to buy. Bank Nifty is a buy clearly, but above 22,400 plus 22,500 is something that you need to watch whether markets are able to clear that smoothly or there is some sort of resistance there. Metals are bullish, however they are extremely deviated from short-term moving averages, so I would suggest wait for a consolidation to happen or trade spreads instead of going direct naked longs, or wait for a dip to happen. Nifty Energy looks making a base above 20 days moving average. Buy on dips unless and until however, you should be avoiding unless and until index is below 15,800. So in case you find energy index above 15,800, go and find your buying opportunities into energy stocks. IT clearly looks under pressure. Dollar has been falling. That causes impact on IT stocks margin. So that's clearly a challenge. I would suggest avoid doing any risky trade into IT. However, you can consider accumulating some good quality stocks. Pharma sector looks undergoing profit booking. However, one can initiate longs if 11,420 on index is not broken on the downside. Auto index is positive with buy on dips view. This index is also deviated from 20 days moving average, so one should either write options with longs in case you're buying rally or buy on dip. So bottom line is lots of indices which have been performing, they are extremely deviated. So what we are expecting is in coming few sessions there should be a subdued movement, a kind of range bound movement. There should be some sort of consolidation. Only then it will prepare for a good uptrend rally. In case you see the rally happening, trust me, we are on bubble and the correction would be steeper. Very steep correction may come. So it's good for the indices to halt. It's good for indices to take a dip because corrections are always healthy. So that would be all in today's session. This is how you should be planning your trades, and wish you all the best. Have a great trading day ahead. Abhishek Raj signing off. Stay healthy, stay wealthy, and yes, don't forget to subscribe and hit the bell icon to stay updated. Thank you so much. Bye bye.